August 13th, 2025, a day for the record books on Wall Street. The market didn't just climb, it absolutely soared. But what's really going on behind those big, flashy headlines? What was the real driver behind this massive surge? We're going to break it all down for you and connect the dots. Let's get right into it.
So, the big question is, what really lit the fuse on this thing? To get our heads around a rally this big, we've got to start by looking at the numbers themselves. All right, let's start with the results. And this wasn't just a case of one or two big stocks pulling everything up. No, the optimism was seriously widespread, and the gains were pretty impressive right across the board. And look at this. This wasn't just a party for the giants. I mean, sure, the Dow was up a full percent, and that's solid. But the real story here, the thing that catches your eye, is the Russell 2000. That's the index for smaller companies. A 2% jump there, that tells you the confidence is running deep through the whole economy. And here it is, the number of the day. The S&P 500 closed at a brand new, all-time high, 6,466.58. Think about that. We are officially in uncharted territory now. Okay, so record highs are great, but why now? What was it that drove this incredible wave of investor optimism? Well, it really all boils down to one single powerful idea. And here it is. The whole rally was pretty much built on this one belief, that the Federal Reserve is about to start cutting interest rates. The idea of cheaper money just sparked this classic risk-on feeling, where investors get brave and start piling into stocks.
And this wasn't just market chatter or wishful thinking, This idea got a massive shot in the arm from the U.S. Treasury Secretary Scott Bessent, who actually came out and publicly called for a half-point cut in September. I mean, when a top official sends a signal that strong, you better believe Wall Street listens.
And you could see the ripple effects almost instantly. As everyone started betting on rate cuts, the U.S. dollar got weaker and Treasury yields dropped. That's just a textbook signal that money is moving out of those safe assets and flowing right into the stock market.
So beyond the big picture, there were some really interesting stories with individual companies that kind of tell the tale of the day. Let's look at a few of the big movers and shakers, because they show you the raw power of disruption and the intense pressure of investor scrutiny.
First up, Amazon. They announced this massive expansion of their grocery delivery service. And the reaction from their competitors was, well, brutal. Maple Bear, that's Instacart's parent company, plunged 12%. DoorDash took a big hit too. It's just this stark reminder of how one move from a titan like Amazon can send shockwaves through an entire industry.
Okay, now for a really fascinating story. It's kind of a paradox, really, from the wild world of AI stocks. Let's talk about CoreWeave, a huge player in AI infrastructure, because their latest earnings report just seemed to defy all logic.
So, first, the incredible news. CoreWeave's revenue, it tripled year over year. I mean, that is explosive growth. You'd think the stock would absolutely skyrocket on that news, but it didn't. Which leads us to this head-scratcher. If your revenue grows by 300%, why on earth would your stock collapse by over 20% in one day? It feels completely backwards, right?
Well, the answer wasn't on the top line. It was on the bottom line. CoreWeave posted this huge, unexpected net loss, over $290 million. And this tells you something critical about where the market is right now. For these high-growth tech companies, investors aren't just looking for revenue anymore. They're demanding to see a path to actual profit. And that huge loss just completely overshadowed all the good news.
So, with the markets sitting at these record highs, the big question on everyone's mind is, can it last? Let's take a look at what you should be watching now to see if this rally really has legs.
Okay, so on the technical side, traders have their eyes glued to these key support levels. Think of them like price floors that just have to hold. For the S&P 500 ETF, that's SPY, it's right around 6,400. For the Nasdaq's QQQ, it's 580. As long as the market stays above those lines, the bulls are probably going to feel pretty good. But a break below, that could be a signal that a pullback is coming.
So what could pop the balloon? Well, you want to keep an eye on a few potential triggers. Any kind of surprise rally in the US dollar or in Treasury yields would be a huge red flag. Of course, any new comments from the Fed that give us more clarity on what they're actually planning could swing things in a heartbeat. And finally, there's the upcoming Producer Price Index data. That's going to give us a fresh look at inflation, which could either help or hurt the argument for rate cuts. And all of this brings us to the biggest question of all. With this entire rally banking so heavily on the hope of rate cuts, is it possible that all the good news is already priced in? And if it is, just how vulnerable is this market to any kind of disappointment? That's the key thing to be thinking about right now. Thanks for watching.
Thanks for tuning in to Daily Market Newscap. If you found this update useful, hit that like button, smash subscribe, and ring the bell so you never miss a beat. I'll see you tomorrow with your next dose of QQQ, SPY, gold, crypto, and US dollar action. Stay sharp and trade smart.